Hi guys, welcome back to the Wild Panda. I'm Susan, and today we're going to talk about high interest savings accounts. So I know I've talked about traveling and using credit card rewards points. We'll get into all that later. Honestly, the most important thing to do is to have a savings account. You have to save for anything that you want to do, like have an emergency fund, have a travel fund. So it is important to save your money, but you don't want to save it in just cash. The reason for that is because of inflation. If you look at this chart, it'll show the inflation rates year over year, averaging about like 2% every year. So if you're saving, for example, $100 in cash under your bed, that money loses $2 in value every single year. Instead, what you want to do is to put your money in a high interest savings account. See, traditional banks' interest rates are like 0.01% APY, which is annual percent yield. That's how much money your savings account will generate in 1 year of being in that account without being withdrawn. High interest savings accounts, the interest rates are as high as 2.5% at some online banks. And the reason that online banks can provide you with that high of a percentage as opposed to a traditional bank like Bank of America or US Bank or whatever is because they don't have actual branches. And because of that, they have more operating income to provide you with that interest rate. So what bank do I recommend right now for a high interest savings account? I personally have SoFi. Now, SoFi is a new company that started out with lending people money for refinancing student loans, but they've actually grown bigger and become invested in money. Like, so they'll teach you money management, and now they provide high interest savings account. The reason why I recommend SoFi as opposed to other banks is because, number one, if you use my referral link down below, you'll earn $50 and I'll earn $50. The interest rates of online savings accounts actually fluctuate based on the market interest. So right now, SoFi Money is at 2%, but that's going to be the easiest $50 that you'll ever earn. So in addition to making it an easy $50, your money will also earn 2% interest every month. Another reason why I recommend SoFi is because, like I said, this is also going to be a travel channel. SoFi provides you with a debit card that gives you free ATM withdrawals. Not only will they not charge you an ATM fee whenever you go to any ATM, they'll also reimburse you ATM fees that other ATMs charge you all around the world. So last year I went to Europe, didn't know any better. I didn't bring enough cash with me, so I had to withdraw money from a bank with my debit card. That bank charged me $5 US and my bank charged me $5 US. So I essentially had to pay $10 to withdraw cash in addition to the exchange rate, just because I didn't have this product and I wasn't aware of products that had free ATM. So SoFi functions as like a hybrid checking and a savings account. Traditional savings account will limit you to how many times you can withdraw money, and they'll penalize you if you withdraw more than, say for example, 6 times a month. With SoFi, it's like a checkings account with the interest rate of a savings account. So you can use money as often as you want. You can do bill pay, you can do anything that a traditional checking account can do. So in addition to SoFi reimbursing all your ATM fees, and they also don't charge you any account maintenance fees, and there's no minimum balance to maintain. So essentially, it's a free account and you can just let your money sit there and earn 2% interest. But also, you get this shiny debit card. Would I recommend staying with SoFi forever? No. The beauty of online banking and the beauty of having options is that you can start with SoFi, earn your interest, and if their rates ever go down, you can always shop for a better one like Citibank, Ally Bank, which currently sucks, Betterment or Wealthfront, so on and so forth. So a lot of people are afraid to use online banks because they're afraid of where their money will go, what will happen to their money. I'll also tell you about something called FDIC. That actually stands for Federal Deposit Insurance Corporation. So it's a separate corporation that is an insurance company essentially that insures banks and their checking and savings account holders. So each bank account, like a checking account or a savings account, each single person account is insured up to $250,000. A joint account is $250,000 per co-owner of that joint account. These online banks that I would recommend to you to use, such as SoFi, they all have FDIC insurance. If you want to learn more, feel free to send me a message. If you want more personalized recommendations, the email's down below. And that's it for today, guys. Thanks for watching.